Welcome back to Global Monetary Watch. Today is July 28th, and we're taking a closer look at one of the latest developments in Iraq's banking sector that has drawn attention from financial observers around the world. Recent reports indicate that 7 Iraqi banks have been cleared through the Central Bank of Iraq's compliance and oversight process, a step that has generated widespread discussion about what it means for the country's financial system. While headlines often simplify complex events, today's report focuses on the verified information, the broader context behind these banking reforms, and why this development is being closely monitored. As always, our goal is to present the facts clearly, explain the significance without exaggeration, and separate confirmed information from speculation. To understand why this announcement has attracted so much interest, it's important to look at the background. Over the past several years, Iraq has been working to strengthen its financial institutions and improve compliance with international banking standards. These efforts have included tighter oversight of commercial banks, enhanced anti-money laundering measures, and closer coordination with international financial partners. The latest reports regarding the clearance of 7 banks represent another step within this ongoing reform process, rather than an isolated event. Financial reforms of this scale typically take years to implement, involving regulatory reviews, updated operational standards, and continuous monitoring to ensure institutions meet established requirements. The banking sector plays a central role in any country's economy, and Iraq is no exception. When banks operate under internationally recognized compliance standards, they are generally better positioned to support domestic businesses, facilitate cross-border transactions, and strengthen confidence in the financial system. According to the information released, the 7 banks completed the required reviews established by the Central Bank of Iraq's oversight framework. While this clearance does not automatically change the country's monetary policy or exchange rate, it does indicate continued progress in the effort to modernize Iraq's banking environment. For analysts, each completed reform represents another building block in a much larger strategy aimed at creating a more transparent and efficient financial sector. Many viewers may wonder what the term cleared actually means in this context. In banking, compliance clearance generally refers to an institution meeting specific regulatory standards related to financial reporting, operational controls, customer verification procedures, and anti-money laundering requirements. Over the past few years, several Iraqi banks have faced increased scrutiny as regulators work to strengthen oversight and align banking practices with internationally accepted standards. Completing this process suggests that these institutions have addressed the necessary regulatory concerns identified during previous reviews. While the exact technical requirements vary depending on the circumstances, the overall objective remains consistent: improving accountability, increasing transparency, and reinforcing confidence in Iraq's banking system. This development also reflects the broader modernization efforts that Iraq has been pursuing within its financial sector. The Central Bank of Iraq has introduced several initiatives designed to improve payment systems, expand digital banking services, and strengthen oversight across commercial banks. Electronic payment platforms, improved reporting systems, and updated compliance procedures have become increasingly important as Iraq works to modernize its financial infrastructure. These reforms are intended to make banking services more efficient for individuals and businesses while reducing financial risks. Rather than focusing on a single announcement, many financial experts examine how these individual reforms fit together as part of a long-term strategy for improving the country's overall banking environment. Another important aspect of this story is the role of international cooperation. Iraq has continued working with global financial organizations, regulatory authorities, and professional consulting firms to strengthen its banking sector. International standards related to anti-money laundering, financial transparency, and regulatory compliance have become increasingly important for countries participating in the global financial system. By improving these areas, Iraqi financial institutions can demonstrate their commitment to internationally recognized practices. While these reforms require significant time and resources to implement, they are generally viewed as important steps towards strengthening institutional credibility and supporting the country's long-term financial development. The progress being reported also needs to be viewed within Iraq's broader economic landscape. Oil exports continue to provide the largest share of government revenue, making developments in the energy sector closely connected to public spending, infrastructure projects, and economic planning. Stable energy income gives policymakers greater flexibility to fund modernization programs, including improvements to financial institutions and banking technology. At the same time, Iraq continues working to diversify its economy by encouraging private sector growth and expanding investment beyond oil. Banking reforms are considered an important part of that broader strategy, because a stronger financial system can support business activity, facilitate commerce, and improve access to financial services across the country. Another important factor is Iraq's relationship with international financial partners. Over the past several years, cooperation between Iraqi authorities and international institutions has focused on strengthening compliance, improving transparency, and reducing financial risks. Regulatory discussions have included efforts to improve reporting systems, enhance monitoring procedures, and ensure that banking operations align more closely with global standards. These partnerships are designed to help Iraqi financial institutions operate more effectively within the international banking system. While many of these initiatives receive limited public attention, they represent long-term institutional reforms that typically require careful planning, technical expertise, and ongoing oversight before measurable results become visible. Inside Iraq, developments within the banking sector can also influence public confidence. Businesses and consumers generally prefer financial institutions that operate under clear regulations and stable oversight. When commercial banks meet established compliance requirements, it can improve confidence among customers, encourage greater use of banking services, and support economic activity. A stronger banking environment may also contribute to more efficient payment systems, improved lending practices, and better financial services for both individuals and companies. Although confidence is built gradually rather than overnight, consistent regulatory progress can strengthen trust in financial institutions and contribute to a more resilient banking sector over time. At the same time, it is important to recognize the limits of what this announcement tells us. The reported clearance of 7 banks confirms progress within a specific regulatory process, but it does not by itself determine future monetary policy, exchange rate decisions, or other actions by the Central Bank of Iraq. Those decisions depend on a wide range of economic indicators, including inflation, foreign exchange reserves, fiscal conditions, global market trends, and broader economic objectives. As additional information becomes available through official statements and verified sources, analysts will continue evaluating how these reforms fit into Iraq's long-term financial development. For now, the confirmed takeaway is that banking modernization remains an active priority, and this latest development represents another documented step in that ongoing process. Even with continued progress, financial reforms are rarely completed through a single policy or announcement. Modernizing a national banking system requires ongoing work across multiple areas, including regulatory enforcement, technological upgrades, employee training, cybersecurity, and cooperation with international financial institutions. Iraq has spent several years introducing new systems intended to strengthen oversight and improve operational efficiency throughout the banking sector. The reported clearance of 7 banks should therefore be viewed as one milestone within a much broader reform agenda rather than the conclusion of the process. Analysts generally evaluate these developments collectively, looking for consistent implementation of reforms instead of relying on any single event to define the country's financial direction. Another area receiving increased attention is the expansion of digital financial services. The Central Bank of Iraq has supported initiatives aimed at increasing electronic payments, reducing reliance on cash transactions, and improving access to banking services for individuals and businesses. Digital payment platforms can improve transaction speed, increase transparency, and reduce opportunities for financial misconduct when supported by effective regulatory oversight. As more commercial banks adopt updated technologies and compliance procedures, customers may benefit from improved banking services and greater convenience. While modernization takes time, these efforts reflect a broader trend toward building a financial system that aligns more closely with international banking practices. Economic observers also continue to monitor Iraq's position within regional and global markets. The country maintains important economic relationships with neighboring nations while supplying energy resources to major international partners. These connections contribute to Iraq's strategic role in regional trade and economic cooperation. A stronger and more transparent banking sector can support these relationships by making financial transactions more efficient and increasing confidence among international businesses operating within Iraq. Although banking reforms alone do not determine economic performance, they represent one component of a wider effort to strengthen institutions, encourage investment, and support sustainable economic development over the long term. As we conclude today's report, the key takeaway is that the reported clearance of 7 Iraqi banks represents another documented step in Iraq's ongoing banking reform program. It highlights continued efforts by the Central Bank of Iraq and financial authorities to improve compliance, strengthen oversight, and modernize the country's financial infrastructure. At the same time, many important questions about future monetary policy and broader economic developments remain subject to official decisions and evolving economic conditions. We will continue following verified announcements and official updates as they become available, providing factual coverage focused on confirmed information rather than speculation. Thank you for watching Global Monetary Watch. If you found today's analysis informative, subscribe to the channel and press the bell icon so you never miss our latest updates on Iraq's financial and economic developments.